We start off with a record-setting day on Wall Street. The S&P 500 closing at a new all-time high, along with the Russell 2000. The Dow is now within 100 points of its own record. The play of the day today, the reopening trade. Cruise lines were up, airlines were up, retail was up. And we're about to get the real read on the consumer when the retail earnings kick off next week. So is the consumer back in business despite the long list of headwinds that are still out there? Brian Kelly, kick it off.
You know, I think if you look at this as the K-shaped recovery, I think part of the consumer is back in business. I also think part of the consumer is stocking up once again. And so the real question is, as we go into the winter and as COVID cases surge, well, how does the consumer behave? Is this kind of the last push into the time where the consumer locks down? Or is this going to be business as usual and people are going to go about their lives? Now, for me, I frankly don't know the answer to that, you know, and where the market is, it seems to me that there's not a lot of risk reward to get overly long or overly short because you just don't know what's going to be the dominant factor over the next 6 weeks to 2 months.
Right. I mean, on the one hand, you've got positive news. We just heard from President Trump in the Rose Garden say that he expects a vaccine as well as a treatment to be given emergency use authorization by the end of the year. So that's the good news here. But if you are worried about the second wave and you are in a state where the infections are rising, Victoria, you might be spending your money on toilet paper and canned goods and not be in the mood to buy some cashmere sweaters.
That might be true, Melissa, but I think if you look at what we're seeing in the market, especially today, investors are looking past this rise in COVID cases right now, and they're focusing on that positive news, on that vaccine news that we saw come out on Monday from Pfizer. We've got Moderna that we know is any day now going to come out with their phase 3 information. Since it's going along the same messenger RNA process that Pfizer did, we anticipate we're going to get good news there. And we've got consumers sitting with savings rates that are higher than their historical averages heading into the holiday season. So the consumer has pulled back a little bit, but I think when you look at a Federal Reserve that is there to support the economy, when you've got low rates going on, we've got 30-year mortgage rates yesterday that came out at 2.98%. I think you've got a consumer that is ready to continue spending on a modified basis, and it's going to continue to push the markets higher.
Now, Grasso, I know you've been stockpiling cashmere sweaters, but I did want to point out this chart from J.P. Morgan pointing out that Chase card spending has, quote unquote, fallen notably. In particular, they've seen the biggest declines in states where COVID infections are rising the fastest. For instance, in the past 2 weeks, they saw a 7+% decline in North Dakota. So how do you factor that into sort of the Fed is on our side and all of this good news when people on the ground are sort of, you know, tightening their belts, so to speak?
Right. Well, you know what's interesting? None of us have talked about the Fed in the longest time. I can't remember the last time I said the Fed before tonight. So I think rates are rising. They're not going to be staying lower. That's why you see the value trade kicking in. But as far as, I think there was such a pull forward, Melissa, of products that everyone needed or thought they needed. Now they're sort of sitting on their hands and they want to see where the chips fall. I think that the way you kind of square this up, market ripping. But is that just because it was an overreaction because people thought the market was going to fade after the election? I did. I thought the market was definitely going to fade after the election. I was pricing in a blue wave. You needed a checks and balance. Now we have that. People had to overestimate what that checks and balance were going to be for the marketplace. I do believe the market has gotten ahead of itself. Georgia, runoff. What happens if there is a blue wave still? There's going to be another over adjustment. And the market doesn't have the luxury of finding out until January. What does that mean? It means that you have to adjust yourself, and the risk reward is sell before year end, and you can always buy it back in January, but you're not going to have that flexibility, if you will, to say taxes aren't going up, capital gains aren't going up, corporate taxes aren't going up. You just don't know until January 5th, so I think you have to be careful in the waters that we're in right now.
James, you've been proposing for a long time that there would be a major pullback. We haven't seen it, and I'm wondering if the election is now off the table, so to speak, but there is the possibility of a blue wave out there still, then do you stand by that pullback call?
Actually, I stand by it. This is a bubble, this market. It will burst at any moment. It could burst from the wave of lockdowns coming, a new strain of the virus, or a delay in stimulus. If we look at where our market stands here, we are at all-time highs, which is 13% higher than we were last Thanksgiving, where we had reached all-time highs, and then 5% above February highs pre-COVID. It implies that this market now and going forward is stronger than it was pre-COVID, which is simply impossible. We also have to understand we have slowed down. Although we've touched this new high today, we've had two 9% pullbacks in the previous 6 weeks, which was the first sign of weakness in this market since the March lows. We do expect a third pullback before year end. A 10% will get us to about 32.50, which would be 10%, which we've touched, as I said, twice already in 6 weeks. And we think if we don't hold there, we're going to see 3,000, which would be a 20% decline from here. And so we absolutely still hold that true.
That's quite a call. James makes a lot of good points, Victoria, but at the same time, can you argue that the market's seeing all of these things already in terms of climbing COVID cases, in terms of a delay in stimulus, or maybe even no stimulus until January or February, that we're actually climbing a wall of worry that the market is actually digesting all of these things and taking everything in stride, as opposed to what James is predicting, which is a 20% pullback?
Yeah, I mean, I hope James is right to an extent, and I think he is. There's continued volatility in this market. We still have uncertainties around the election to an extent, around COVID. So we're not going to be surprised to see a pullback. I'm not sure 20% is what we're looking at, but we would actually use those as opportunities to buy some of those secular growth names that maybe have been on your wish list and they've been those high flyers you haven't been able to add. Use this as an opportunity to put them in your portfolio. Look, the fundamentals still look pretty good. You've got unemployment continuing to improve. When you look at manufacturing, it's continuing to improve. You've got businesses saying inventories are low going into a holiday season and they're going to add. You have ISM numbers where it's across the board good in production and new orders. So I think the fundamentals are strong enough to carry us through, even though there may be some volatility. So I'm more optimistic than James is going into the end of the year.
But I guess the question going into next week with the slate of retail earnings, Brian Kelly, is do you bet against the consumer? I mean, if we're all stuck at home and the pandemic is miserable and we're months and months into this thing, maybe you will splurge on those presents to get the tree all nice and filled out on the bottom.
Right, and maybe you already have, and that's going to show up in the earnings reports that we're going to see next week. The question is then, is that as good as we get, and do we get a sell the news type of event? And again, I just think, listen, I'm not as smart as somebody like a Steve Grasso, so I need things to be very, very easy. And to me, there's just too many cross currents out there that I would rather look elsewhere in the world. So I'll look over at Asia. You look at Japan breaking out from a 20-year consolidation pattern. They've got the virus relatively under control, probably have more growth. So I don't know what's going to happen in the U.S. There's too many questions for me. I will look elsewhere.
Grasso, I guess you set the bar. I'm not sure where, but you set the bar, so I'll go to you on this.
Well, you know what, BK? Admitting it is 50% of the battle, so you're halfway there.
Shepard Smith here. Thanks for watching CNBC on YouTube.